so I know you touched on the next spending bill, so the social and climate spending bill, but we did pass the infrastructure bill, right? So one of the things that's happened with that is that's now sitting on the president's desk for signature, which means we're getting over the next 10 years or so, another $1 trillion of stimulus into the economy. So along with that, right, it's probably a boon for the stock market. We're continuing to get a lot of money flowing through the system, and that's been really good over the last 2 years during the pandemic, and that trend should probably continue. We'll look to see how the other spending bill comes. That vote is scheduled for Friday, so there should be hopefully some more clarity of what that looks like. There's been tons of debate about the SALT tax and a lot of pushback from centrist Democrats about why we're increasing the SALT cap, which directly goes back to benefiting the rich, which has been against the entire progressive agenda that they've been looking for the whole time. But yeah, very interesting that they've changed all the tax rules that they tried to take on and have put all that stuff on the shelf. But what I wanted to talk about today was we really have seen now the highest rates of inflation over the last 35 years. So going back to the early 90s, late 80s even, inflation rates that we're seeing above 6%. And what does that mean as a whole? So for the stock market, we've continued to see record highs, but we're starting to see some chinks in the armor. Walmart reported earnings today. Target reported earnings, talked about supply chain issues and starting to see some more stress on pricing and their ability to get their materials out and get stuff stocked on the shelves. So that's hurt their stock prices in the short term, but overall, we're continuing to see things moving in a higher direction. The renovation boom continues for Home Depot and Lowe's. Like, those companies are continuing to see record profits because material costs have increased and they're passing those on to consumers, and people continue to do improvements while the pandemic lingers on as more people are focused on staying at home. So we're seeing this big bugaboo about inflation, and historically, right, it's prompting people to think about, is this going to lead to a new recession? Is it transitory? Is it permanent? And how are those things going to work? And the answer is, we're not really sure. Yes, we're seeing these high levels of inflation, but at the same time, we're seeing significant increases in wage growth, which is kind of contradictory. We're also seeing some other mild signals, right, where we're getting a big spike in natural gas prices or in oil prices, gasoline prices. And some of those things are tied to outside factors that are more supply demand driven. The natural gas increase is really tied to what's happening with stuff happening in Europe between Russia and Germany and how they're importing and transferring natural gas. The gasoline prices here are really tied to really low production and rig counts in the United States. And so we'll see how those trends change or move over the next couple of years. Like for U.S. oil rig counts with high gasoline, Biden announced yesterday that they're going to investigate whether or not companies are artificially keeping gas prices high, which is really comical because if you look at the number of oil producing rigs in the U.S., it's at the lowest level it's been in the last 7 years. And this goes back to when oil prices collapsed in 2016. I mean, we're still below that level. So if I just don't have the supply, I'm not going to be able to really drive prices down. But we're going to make sure we get a government investigation into that because that's where we need to focus our attention right now. And so, as a whole, inflation in the long term is probably bad. If we see this stuff persist for the next 2 or 3 years, it really will start to put a bigger crimp on corporate profits. It will put a lot of pressure on the ability for companies to continue to hire because you're going to have increased costs. So if we can hopefully kind of mute this, if that means the Fed can start raising their rates over the next year and a half when they start really focusing on that, or they cut their asset spending to kind of tamper down some of the money that they're pumping into the system, that should hopefully mitigate some of these effects. But there's also some positive effects that are coming from this too. Fannie Mae and Freddie Mac announced that they're going to start increasing the loan limits of which they're absorbing loans. And so the caps in high cost areas around 860,000 for the first time. They're going to move to over 1 million next year. And what that does is it makes things more affordable for a lot of home buyers. So the interest rates that those borrowers pay because they're backed by Fannie Mae and Freddie Mac will continue to go down. So that should help keep housing demand stronger, which has been a huge increase in net home values over the last couple of years for everyone, and they're trying to keep that demand. But I think that's also a supply demand issue as well, right? There's just not a lot of supply. So if you have those factors continuing, there's been a lot of talks about, are we now back in the stock market bubble? Are we going to move into a housing bubble? But the trends just don't support that. So inflation is going to be something to really watch over the next couple of years. This stuff to me seems to be very expected based on what we're seeing from economics 101, like you would get back when you took freshman economics in college before everybody bailed on that. I really think that it's going to continue to produce for the stock market in positive ways. We're always going to have up and down cycles, but as a whole, we expect those trends to continue as we're moving into year end and into Q1 of 2022. So a lot of good things that are out there, certainly more tailwinds than headwinds. And we keep watch on inflation, but in the long term, we expect asset prices to keep moving higher.